So, in this episode, we are going to be looking at dealing with losses in trading. So, what does it mean? What does dealing with losses in trading? What does it involve? You see, in trading, you discover that one of two losses, one of two things are inevitable in trading. And what are those one of two things that are inevitable in trading? It is either you make losses in the market or you make profits in the market. There are no two ways about it. As far as trading is concerned, you are either making profits or you are making losses. However, a huge majority of traders since time immemorial have been, if I have been on the losses pedestal than they have been on the profiting pedestal. And there is a reason for this. Why do I say there is a reason for this? It's because for everything that's happening, there is a reason that's making such things happen. So let's look at number one reason that makes uh, people have unexplainable losses in forex trading is because of poor risk management. Poor risk management or bad risk management. You see, in trading, you cannot totally control your profits, but you cannot control your what will be the outcome of that trade. That is, in terms of what you will make as profit from that trade, you may not be able to totally control it, but you see what you intend to inject into that trade, either as amount, as lot size, as risk or whatsoever. You can control it. You can control your risk. For instance, if you are a newbie trader, no matter how big your portfolio is, let's assume you are trading an account of maybe 1,000 $10,000 or $1,000. Not because you are trading an account of $10,000, then every trade you are injecting $500 into every trade without considering what will be the outcome of that particular trade. No, that's a bad that's a bad risk management system. You should be you should be careful enough and deliberate enough to ask yourself, should this trade go wrong with this kind of lot size or this kind of risk that I'm exposing my account to? What will be the outcome, or how will I be able to manage it? Will I be able to continue trading for long? How long, how many losses can my account handle in this using this particular uh, risk risk level that my account can sustain, or how many losses will I incur in a row before this my account finally dies off. That is, if I'm in losses consistently, how long can I be in losses before this my account finally closes or before all funds in this account totally goes away. So that's the number one thing that you must consider in trading. Then another thing that you must consider under losses is that you don't put all your eggs in one basket when it comes to trading. Now, this statement is relative. Why is that I'm saying it's relative? Uh, in some cases, you may need to, in very rare cases, that is when a trade is now well defined already that is going towards a particular direction, and the direction is in favor of your analysis. You can now add to your positions that are already running to make more what? To make more profit. But if it happens that you have not seen the destiny of that particular trade yet, you cannot just go ahead to just jump into that particular trade, and maybe you are leveraging heavily on that particular trade. You are leveraging a very heavy amount on that particular trade. Maybe you took a trade and the trade is not yet defined yet. You impute more than half of your account as a risk. You expose it as risk for just one particular trade. So it therefore means that should that trade go wrong, half of your account will be gone. And it also means that if you have opportunity to see better trades that may be better, which may have more potentials than this particular one that you lost more than half of your trading portfolio to, you may not be able to take as much risk as this one that would actually fail. So over leveraging and putting all your eggs in one basket in trading is actually a bad way of trading. Another thing that you must actually know about trading as regard managing the losses effectively or dealing with losses is that losses are not personal. The market are not against you. So if by the time you begin to have series of losses, you become emotional and you see the market as personal, or that the market is personally against you. The truth of the matter is that the market is not against you. Yes, the market is not against you. So what you should know is that the market will move wherever it wishes to move to, irrespective of whatever you do or irrespective of however you feel. However, you are the one who should control what you inject as risk, control your analysis, control when to enter the market, as well as when to exit the market. These are the things that you must do as someone who wishes to deal with losses properly in trading. Then number 4 is that understand a particular market before you trade it, especially on a live account. Now, what does this mean? You see, as a trader, there are traders who specializes only in volatile currency pair. They specialize in only volatile currency pair. Then there are other traders who specializes on medium volatile or not volatile, non-volatile currency pair. These two kind of traders cannot take trades the same, cannot trade the same way. The one who trades on least volatile trading pairs has the potentiality of being more of a swing trader, or yes, more of a swing trader, maybe probably a position trader, or than being a scalper. The one who trades very volatile market has the potentiality of being a scalper, as well as a day trader because of the kind of market he trades. So these two kind of trader may not have the same trading philosophy or the same trading ideology. So the one when you are a trader, maybe you trade on least volatile pairs or least volatile market, you should not allow a trader who trades on very volatile pair to just throw trades at you and tell you that trade this, trade that, and you just hop on it to trade on such. Ensure that it aligns with your trading philosophy, it aligns with your trading belief before you what before you actually what before you actually execute such trades. Understand the principle behind any trade or behind any market, how those market moves, how they behave, how those currency pairs behave before you should what trade them. If possible, you can do what's called a demo study of it. Trade them on a demo account for maybe minimum of 1 week or to 3 months to know how this particular currency pair or this particular market, how they behave before taking them to a live account, and ensure that you are comfortable with the way they move. That they move very fast, they move very slow, they move on a medium pace. Ensure that you are very comfortable with the way they move before adding them to your trading portfolio or your trading instrument. So that's another factor. That's number 4 factor. Then number 5 factor is trading against the tide. That is, you always want to go against the direction of the market. A market is obvious that it's in a downtrend, but for some reasons which are unexplainable, you just want to trade against the trend with the market. You don't just want to take a long position, or you intend to take a buy position. Now the question is, what is the possibility that this particular buy position that you took now, what's the possibility of the market trading in this upward direction despite you seeing that maybe there a particular market is in a downward trend? So if you do not have the what if you do not have the strong this thing if you do not have the strong reason as to why a market is trading in a particular way, desist from what desist from trading that particular market. Don't just say because everybody are trading it buy, then I should trade it buy. Everybody are trading it sell, then I should trade it sell. Ensure that you have enough reasons that are justifiable before executing any trade action on any particular market. Don't go against the tide. If the trend says this particular market is in an uptrend, look for pullback opportunities and take a buy on that particular market. If the market says it's a downtrend, look for pullback opportunities pullback opportunities on that particular chart and do take a sell position or take a short position on that particular market. Don't ride against the wave. Don't ride against the trend. The trend is your friend as it affects financial markets trading. The trend makes trading easy for you, not going against it the other way around. So that's a part 1 of this particular episode of dealing with losses. Then the last thing I will say in this part 1, which is the 5th item, is that losses are not personal. Everyone trading the financial market have had their share in the past and will still have their share in the future. because no matter how good you are as a trader, you cannot have 100 trades in a row and make profit in the 100 trades in a row that you took. So there are times that you have losses. The most important thing is knowing how to minimize your losses and maximize your profit. That is now what makes you a profitable trader. So I'm Moses, and I'll talk to you in the next video. Bye.